Good morning, Michel.
Good morning.
In your last video, you recommended to be careful on the stock market. You were right.
That's true. I mean, markets have fallen because the great referee, like in a football play, Mr. Bernanke, has decided to say it is half-time. We don't know if the game is over, but at least it's half-time. And most of the people who have invested money in speculative investments, going from high-yield investment bonds towards high-yield emerging countries to emerging currencies, all the investors are withdrawing their money now. They want to take their profits. So we have a big tension in these emerging countries, and the situation is quite shaky over there.
And could we see a financial crisis like in '97 in emerging market?
No, because situation is different. But the situation is really tough. These countries need the capital flows to finance the trade deficit, for example, like India today. They have difficulties in financing themselves. And in the same time, we have a China which is continually slowing down. So that means the environment is not very supporting for this region today.
And investors have to change their attitude.
Yes, because before it was easy. It was just give me the name of the country who is going to print money and we'll invest in this country. Now the game is changing and we have to ask where are we going to have some economic growth? And that is a difficult question because trying to guess what would be the scenario, we have two scenarios and it's difficult to choose between the two scenarios.
Okay, but there are always conflicting scenarios.
It is true, but this time the probabilities of the two scenarios are more or less even, but the consequences are very different. And the first scenario could be appealing. It would be a recovery in the US at the end of this year, then next year. In that case, bond yields in the US will rise, but stock markets will continue to rise because in the same time we'll see improving corporate profits. And then the market will accept this event.
And the second option?
Second option is not very appealing because that means we'll have no economic recovery. In that case, people will get very worried because everybody will say, what can we do? Central banks have no more power to stimulate the economy. And then stock markets will have to fall because there will be no profit to justify the valuation.
But is there a country where the situation is easier?
Yes, maybe Japan. Japan has decided two things which are not going to change immediately. They changed the monetary policy and they've changed the budget policy. But we're still waiting the third decision, the third arrow, as Mr. Abe, the Prime Minister, is saying.
Which one?
Which is a fundamental change. Change the labor market, improve the flexibility, let the Japanese corporations to fire people and to hire new people and open the country to immigration because demographics in Japan is not very good and they need new people coming to work in the Japanese corporations.
And when could it happen?
Probably at the end of July because we have very important elections in July and Mr. Abe is waiting this election. He needs a majority there to be able to launch the new Japan.
And mid-time, the market will be nervous this summer.
Yeah, probably all markets will be nervous everywhere, trying to guess where we're heading to. But in the same time, it will give us a great opportunity because market price will be cheaper. And it's always better to buy when it is cheap.
Thank you very much, Michel.
Thank you.